Welcome back to Dominating Your Investments. I'm alive, I'm back. I know I've been off the grid for quite a while, whether it's Twitter, whether it's YouTube. Just been working really hard at my full-time job at VMware in a new role as a senior product marketing manager for our workload and container security. So they've been keeping me busy, but I'm looking forward to diving into this awesome article by John Rhodes, who wrote this on Seeking Alpha. And he has a great investing community group. I'm not a part of it, but I've read up on some of the other articles he's done, and very good work. It's called Growth Stock Renegades. I just wanted to outline his view on Palantir and what we can expect for 2022, and also look at some of the different things around their contribution margins, operating margins, the net growth in commercial that we know about, and kind of put the puzzle pieces together and why we can feel confident even though the market has been crazy volatile, possibly even looking at a recession in the next year or so, and why we want to keep dollar cost averaging on our highest convicted stocks. So this is not investing advice. This is just for entertainment and education purposes, but want to share what I'm doing with my investments and talk a little more about Palantir and how I'm growing my #1 position there. So let's jump in. Okay, so here's the article, Palantir Green Shoots. So here's the summary of Palantir continues to perform poorly against the market. We know this, but let's dive a little further. The quant view and Wall Street analysts are not currently optimistic. However, Palantir continues to grow at 30 to 40% with little to stop it. I completely agree. Further, Palantir is not burdened by debt and will not go bankrupt. It's one of the reasons why I'm invested in it, for you guys to know that they are debt-free. They have $3 billion of cash, so great point, John. Early 2022 still doesn't look great, but H2 2022 could improve. This idea was discussed in more depth with members of my private investing community. So we're going to go down here and talk about the update. So on January 13th, he wrote Palantir Dark Days. I said that I was bullish on Palantir, but also added some melancholy notes. Unfortunately, the price action has been terrible for most growth stocks, and the macro environment doesn't look favorable for Palantir in H1. Unless there is some kind of huge announcement where SBC drops precipitously, Palantir is most likely going to remain well under $25. In fact, it will likely languish in the $18 to $22 range in H1 2022, and given what we know, what is right. So back in the middle of January, Palantir was down about 8% year to date. Well, here's how that looks now. So we look at that, and just to kind of pause here, we have the stock at $13.68. And he's saying that it could get to possibly 18 to 22 in the first half. I think that's a little aggressive for that kind of growth. But overall, we're going to dive into why do we think that this can get to $25 a share? Why do we think it can get over that in the long term? And that, you'll see through John's perspective, this is a stock you want to hold for the next 5 to 10 years at least, to let it grow and fully compound. So he said, yes, we're down 24% from January 1st throughout today. In terms of price action, perhaps the only good news is that Palantir isn't down 40 to 45% this year. The quantitative view continues to be ugly. And Wall Street is mostly neutral with an overall hold rating. So I really don't pay attention to what Wall Street's saying about this company because, one, I don't think Wall Street's done enough due diligence to really dive into what are the competitive advantages for this software platform. What is their moat? What is the TAM and the potential growth in the commercial sector, and the strength of the business financially? So all of that said, I think it's fair to say that nearly all the indicators are flat or they're pointing down. Palantir is still in dark days. Once again, this is a stock we want to hold long term. We don't want to trade it. Some quick comparisons. It's often a good idea to think about a company in relation to some peers and the market as a whole. While I don't believe that Palantir has direct competition, except for the government itself, I do think that overall pressure on growth stocks is worth considering. Here's some bad news. 1 year ago, Palantir was moving up and down in price faster than the NASDAQ 100. That is, we were seeing for more volatility, but at least Palantir was roughly tracking the index. However, in November 2021, Palantir started to fall off a cliff. Clearly, the QQQ also declined, but the drop was far worse for Palantir into 2022. It's worth digging into the greater than average market pain. So one of the things that we can also look in and we'll see here is that there's a lot of retail investors invested in Palantir. And so especially new investors, when things get tough, they tend to sell. And that's not what you want to do. You want to actually look at holding your highest convictions if you truly believe in them, and then dollar cost averaging and building your position for that future growth. And also really shouldn't be investing money that you need today for the next 3 to maybe even 5 years. So relentless downward pressure on growth. Although Palantir has a market cap of just under 30 billion, it's still relatively small and more prone to violent moves up and down. But the real kicker is that Palantir is an aggressive growth stock. That's what investors wanted, and that's what it delivered. But the macro environment changed, and what I'll call the growth leverage is now working strongly against Palantir. Here's a hint from the New York Times back in November 2021. The Fed has been buying $120 billion in bonds each month and has kept interest rates near zero. Policy moves that have helped make borrowing cheap and keep money flowing through the economy. Earlier this month, the Fed took the first step toward withdrawing support for the economy when it announced that it would begin scaling back its treasury bond and mortgage-backed security purchases by $15 billion a month starting in November. Fast forward about a month and Bloomberg added, the new ratio projections marks a major shift from the last time forecasts were updated in September, when officials were evenly split on the need for any rate increases at all in 2022. The new projections also showed policymakers see another 3 increases as appropriate in 2023 and 2 more in 2024, bringing the fund's rate to 2.1% by the end of that year. So we are going to see these rate hikes, and we know that we need to correct for inflation, but this may also provide an opportunity to add as growth stocks sell off during these rate hikes. Back to the article. Adding it up, the short-term outlook is quite negative. Indeed, depending on your definition, the medium-term outlook is equally negative. Dare I say that I'm bearish in Q2 2022? That doesn't mean I'm screaming sell for the top of my lungs. Instead, as I'll explain below, it's more like my expectations are modest until H2 2022. Some green shoots. I largely agree with Forbes on these points. Palantir further sees its revenues growing at levels of over 30% each year between 2021 through 2025. The longer term opportunity also looks solid. The company's artificial intelligence AI software tools are trusted by the US government, and these technologies are becoming increasingly valuable in the commercial space as well, as AI plays a greater role in our economy. I believe that Palantir will continue to see 30% or higher revenue growth over the next 2 to 3 years, and I see artificial spending to ramp up. NVIDIA CEO Jensen Huang broke it down like this. As you guys know, that's my second largest holding, and I love both founders and both companies. $300 billion in sales to the auto industry, $300 billion in chips and systems, $300 billion in enterprise software, and $100 billion in the video game industry. That's $1 trillion. And for each industry, there's a true deep need for data analytics, data management, strategic decision making, and far more. That's where Palantir fits in, and that's mostly in the commercial space. We know that Palantir is very strong in government, of course, from the Q4 2021 report. Government revenue growth year over year in Q1 2021, 76%, Q2, 66%, Q3, 34%, and Q4, 26%. Now we know that that's declining, but we also know that government spending is very cyclical, so it'll be interesting to see how this plays out in 2022. Now, for good measure, let's look at the US commercial space. Q1 2021, 72% year-over-year growth. Q2, 90%. Q3, 103%. And Q4, 132%. For both segments, customer value is up, customer count is up, and more. Gross margins are over 80%. And just for you guys who don't maybe follow software stocks closely, that is outstanding. Operating margins are stable. Palantir is still working through post-DPO issues, such as the stock-based compensation. As I explained last year, it'll work out just fine, just slower than investors want. And you'll actually see in their investor relations documents and their earnings, the stock-based compensation is being decreased year over year, and we continue to expect that. And we heard Alex say that on his most recent interview. Now, as a relevant aside, the Q4 2021 earnings report that dropped in February 2022 wasn't exactly wonderful. Non-GAAP was 0.02 or 2 cents, but missed by another 2 cents. So they expected 4 cents total non-GAAP earnings. Revenue is expected to be above consensus in Q1 2022 at least. We'll see. The point is that there's stability or growth in nearly all parts of the business. It's not a perfectly running machine, but it's a strong company. And as I like to point out, it's not going bankrupt because of this. And he shows the graphic here. There is no debt. They also have the $50 million in gold for that quote unquote black swan event, which kind of feels like we're living in one right now. But they also have $3 billion of cash. So very strong and very stable. So we're going to look here into the second part of the article, which really shows some graphics. Now, for you podcast listeners, you won't see these unless you go to the YouTube channel. But here we can see investors are generally aware of Palantir's customer growth, but it's useful to consider the other financial metrics of growth. And what we see on this graph is phenomenal results. Revenue growth year over year for last year was 41.1%. The sector median was 19.3%. If we look at revenue growth forward, it's projected 33.29%. That median for the sector is 13.87%. So when we look at the differentials to the sectors, that's 112% on the first metric and 140% in the second. If we scroll down, we can see the EBITDA growth forward, 52.25%. The median is 16.5%. If we look at growth, EBIT growth forward, 56.1%, and the sector median, 20.11%. So we see them blowing out the numbers of the sector medians and averages, and what they're doing is providing top-level growth numbers, along with healthy, efficient results on the business and how they're doing this. The EPS forward long-term growth projection of 3 to 5 years compounded annual growth rate is 43.6%. The median average for the software sector is 15%. So levered free cash flow growth year over year is also 79%, whereas the sector is 16%. So they are profitable when you take the stock-based compensation out. They are efficient. They are operating at a high level of efficiency and growth and being able to invest in growth while maintaining high gross margins. So I do understand the stock-based compensation cancels all that out to show a non-profitable company. But as that decreases and as these numbers continue to grow and stabilize, we will see a juggernaut of a healthy company that's growing free cash flow and profits very quickly to reinvest in itself. The working capital growth is 33.2% and 10.58% is the average. So you see them beating these numbers significantly. So he says here, it's all there in plain view. Clearly, revenue is growing like crazy, even when compared to the sector. And both EBITDA growth and EBIT growth are crushing the sector median. Very healthy. Looking forward, EPS forward growth is also outstanding. Even working capital is in good shape, which I see as just another buffer against a weak environment for growth. I also encourage investors to look here. Gross profit margin is higher than the sector median. Levered free cash flow margin is higher than the sector median, and cash from operations is higher than the sector median. All of this indicates to me that true profits are coming, just not in Q2 2022. For a wrap up and summary, we're stuck right now because of valuation, stock price, stock-based compensation, and missing Wall Street expectations in Q4 and the macro environment. The big picture is that Palantir is rightfully suppressed. But digging into the details, it's also true that Palantir is a growth machine with a bright future. Summing it all up, I can say I'm not selling Palantir, I'll continue to hold, or said differently, I'm neutral about Palantir in the short run, but bullish in the long run. Now is not a bad time to accumulate or start a position. Dollar cost averaging or dripping is equally rational for some investors. So I just want to give a shout out to John Rhodes, phenomenal article that he wrote on Palantir, and I hope that this was very beneficial for you to just kind of look at Palantir from a different lens and really digging into the financials opposed to just seeing where the stock price is today. But this is a long-term growth story, so pay attention to the customer growth, and we'll dive into this in other videos and episodes of the customer growth, the contribution margins, which shows once they acquire a customer how much more margin and revenue they contribute as they renew those contracts and as they use more of the platform, which indicates a very healthy and addictive platform for customers to see value off right off the bat and continue investing in and purchasing. So Remember, it's never too late to start dominating your investments. I'm glad to be back and hope to put out a new video soon here shortly.